Most people think the Federal Reserve can wake up tomorrow, push one button, and freeze every retiree's bank account. Most people think if that happens, there is nothing regular people can do about it. The truth is very different. The Federal Reserve does not hold your personal checking account, but confusion, fraud alerts, court orders, and bad planning can still leave your money locked up when you need it most. Don't click away. Hit subscribe now, or you might miss something your bank doesn't want to explain clearly until it is too late. Before I show you anything, I need you to answer one question. If your debit card stopped working tonight, how many days could you pay bills, buy groceries, and get medicine without touching that account? Be honest with yourself. Not what you hope, not what you guess. What could you really do in the next 72 hours? Most people assume they are safe, but here's what I hear over and over from people just like you. My check comes in every month. My bank has been there for 20 years. I don't move money around, so nobody will bother me. That sounds comforting, but comfort is not a plan. Think about the last time you logged into your bank account. Did you know exactly how much of that money was fully insured? Did you know who would help you first if your account was flagged for fraud? Did you know whether your Social Security deposit would be protected the same way if it came in by direct deposit versus a paper check? What I want you to realize is this. You might think this does not apply to you because you follow the rules. Let me ask you something. When banks freeze access, delay transfers, or question a transaction, do they call the customer first and make life easy? Sometimes they do. Many times they do not. Stay on this video and subscribe, because what I'm about to tell you could save you from the exact kind of panic that hits people at the worst possible time. If you answered yes to any of those questions, then pay close attention because you could be next. Not because the Federal Reserve is coming after you personally, but because the system is more fragile than most people realize. The headline scares people for the wrong reason. The real problem is not one giant switch. The real problem is weak preparation. You can lose access to money for reasons that feel sudden and unfair. A fraud alert can lock a card. A court order can freeze part of an account. A bank failure can create stress, even when insured money is protected. Too much money in one bank can turn a manageable problem into a painful one. And there is one more thing older Americans need to hear. If your income is mostly Social Security, pension, or retirement savings, a short disruption can hit harder. Missing one bill payment hurts. Missing medicine, rent, or insurance hurts even more. That is why I'm going to show you exactly what to do before a problem ever shows up. Meet Linda. She was 71, a retired receptionist living in Columbus. She was careful with money, paid her bills on time, and believed the safest thing to do was keep everything in one familiar bank. She told her daughter, "I don't chase trends. I just leave my money where it has always been." Then one Tuesday morning she tried to buy groceries and her card was declined. She thought it was a machine problem. She tried again. Declined. She went to the ATM. No cash. When she opened her banking app, part of her account was under review after a suspicious transfer attempt the bank had blocked overnight. Her stomach dropped. She had done nothing wrong, but now she was stuck in confusion. Her electric bill was due in 2 days. Her prescription refill was due that afternoon. She kept saying the same thing many people say in that moment. How can this happen? I didn't do anything. What she wished she had known was simple. The danger was never some secret Federal Reserve button aimed at her. The danger was depending on one account, one card, and one path to her money. One weak point was all it took to throw her whole week into chaos. Take this seriously and subscribe now, or risk being the person who learns these lessons only after your money becomes hard to reach. Here is what nobody explains clearly. Let me break it down into 3 parts. First, the Federal Reserve is not your personal bank. Second, banks and government rules can still limit access in certain situations. Third, your protection depends less on headlines and more on how your money is set up right now. The first thing you need to know is who actually holds your account. Think of it like this. The Federal Reserve is more like the road system and traffic control for banks. Your checking account is usually at a commercial bank or credit union, not at the Federal Reserve. That matters because it means the scary claim people repeat online is backwards. Let me be very clear about what this means. The Federal Reserve does not maintain normal checking accounts for individuals. It does not sit there looking at your grocery purchase, your gas station receipt, or your pharmacy payment waiting to freeze your money. That is not how the system is built. Now let me show you why people still get scared. They confuse the Federal Reserve with every other part of the financial system. When a bank freezes funds because of suspected fraud, or when a court order reaches an account, Or when sanctions law blocks money tied to a specific legal issue, people say the government froze bank accounts. That phrase spreads fast, even when it is missing the truth. Watch until the end and subscribe, or risk making the same mistake that costs retirees peace of mind when they need it most. The second thing you need to know is the exact number you should remember. It is $250,000. That is the standard FDIC insurance amount per depositor, per insured bank, per ownership category. The rule is simple. If too much of your deposit money sits in one ownership category at one bank, the extra amount may not be fully protected if that bank fails. Now, do not let that scare you more than it should. FDIC insurance exists for a reason. In a bank failure, insured deposits have historically been made available very quickly, often by the next business day. But here is what matters for you. Quick does not feel quick if every dollar you use for daily life is trapped in one place and you have no backup. The third thing you need to know is how freezes really happen for retirees. Sometimes it is fraud review. Sometimes it is a garnishment order. Sometimes it is a legal hold. Sometimes it is a simple mistake that takes hours or days to clean up. The money may not be gone forever, but your access can still be interrupted right when you need it. Here is another exact number to remember. 2 months. If your federal benefits like Social Security are directly deposited, banks must review the last 2 months of direct deposited federal benefits when there is a garnishment order. That means 2 months of those direct deposits get special protection. But if you deposit a paper check yourself, you may lose that automatic protection. Let me say that again in plain English. Direct deposit is not just convenient, it can protect you. A paper check can leave you with more work, more stress, and a court fight you did not expect. This is one of those small choices that can change everything later. By the time I'm done, you're going to know more than most financial advisors bother to explain in a short meeting. Join thousands of careful retirees who subscribe and stay informed, because the people who protect their savings are the people who keep learning before the emergency starts. Let me show you Walter. He did not change anything. He kept $420,000 in one savings account because he liked seeing one big number on one screen. For years, nothing happened. Then his bank ran into trouble and suddenly he was forced to think about insurance limits at the exact worst moment. Now look at Denise. Same age range, same lifetime of saving, same desire for safety. She split her money across insured limits and ownership categories before anything went wrong. Same starting point. Here is where she is now. Calm, clear, and able to reach what she needs without guessing what is covered. The difference was one simple action. Here is what I need you to see. No action means confusion under pressure. Take action and you replace fear with a plan. No action means you ask questions after the fact. Take action and you already know the answer before the phone call even starts. Let me show you George. He did not change anything. He still received some benefit money by paper check because that was how he had always done it. When a debt issue led to a garnishment notice, his account was treated very differently than he expected, and he had to prove what part of the money should be protected. Now look at Marcia. Same kind of retirement income, same basic budget. She used direct deposit for her federal benefits and kept clean records. Same situation, same starting point. Here's where she is now. Her protected benefit deposits were easier to identify, and she had less money tied up in a legal mess. The difference was one simple action. Subscribe right now and make a decision to act, because information without action is just comfort that disappears when real life hits. Let me show you Harold. He did not change anything. He used one checking account, one debit card, and one online login for everything. When the bank flagged a strange transfer, his whole money life stopped at once. Bills, groceries, gas, prescriptions, all through the same choke point. Now look at Evelyn. Same stage of life. Same monthly bills. She kept a backup account at a second institution and a small cash reserve for emergencies. Same starting point. Here is where she is now. One account got reviewed, but her life did not stop. The difference was one simple action. Here is what I need you to see. No action means one problem becomes 5 problems. Take action and one problem stays one problem. No action means stress spreads. Take action and stress stays contained. Let me show you Robert. He did not change anything. He never turned on text alerts, never checked transfer notices, and assumed the bank would call before anything important happened. By the time he noticed trouble, several days had passed, and fixing it took longer because he responded late. Now look at Gloria. Same basic habits, same level of trust in her bank. But she turned on account alerts, checked them daily, and called the moment something looked off. Same situation, same starting point. Here's where she is now. Small issue, fast response, little damage. The difference was one simple action. Here is what I need you to see. No action means delay. Take action and you buy time. No action means the system moves without you. Take action and you move before the system closes in around you. Click subscribe today while this window is still open, because the best time to protect your money is before your next account problem, not after it. Here is a myth that keeps people stuck. If the Federal Reserve changes something, every bank account in America can be frozen overnight. That is simply not true. The Federal Reserve is powerful, yes, but your personal checking account is not a little drawer sitting inside the Federal Reserve waiting for a button to be pushed. You might have heard someone say, just keep all your money in one big bank because big means safe. I need to be direct with you. That advice can cost you. Big does not erase insurance limits. Big does not stop fraud reviews. Big does not remove the need for a backup plan. The biggest lie about this topic is this: if your money is in the bank, access is guaranteed. That is false. Ownership and access are not the same thing. You may still own the money, but access can be delayed by rules, reviews, identity checks, or legal orders. That delay is what crushes people who live month to month. The thing everyone gets backwards is thinking panic comes from losing everything forever. Most panic comes from losing access for a short time with no backup. A 3-day problem can feel like the end of the world when bills are due in 24 hours. Imagine your future self 6 months from now. You open your account, everything is organized, and you know exactly what to do in an emergency. Subscribe now or risk staying one surprise away from a very hard week. Move number 1. Spread your cash wisely. Here is why this matters right now. Too much money in one place creates one big point of failure. Here is exactly how to do it step by step. Step 1, add up every deposit account you have. Step 2, compare the total at each bank to the insurance rules. Step 3, move excess cash if needed. Once you do these steps, you lower the chance that one bank problem hurts your whole life. Move number 2, put federal benefits on direct deposit if they are not already there. Think of it this way. Direct deposit is like putting a clear label on protected money before trouble starts. Your action steps are simple. Call the benefit office or log into your account, confirm direct deposit is active, then save proof of each monthly deposit. Now here is what changes when you do this. Your benefit money is easier to identify and better protected in a garnishment situation. Move number 3, build a 72-hour money bridge. This is where most people get lazy. They skip this step and pay for it later. Don't be that person. Here is exactly what to do. Keep a small emergency cash amount at home in a safe place. Keep a second debit card at a different bank or credit union. Keep one bill paid ahead if possible. Why this works: it buys you breathing room when the main account has a problem. Move number 4. Turn on alerts and respond fast. Let me be very specific. First, you turn on text or email alerts for withdrawals, transfers, password changes, and large purchases. Then you check every alert the same day. Finally, you call immediately if anything looks wrong. When you finish, you will have something many people never get until it is too late: early warning. Move number 5. Create your account lockout folder. This is the one most people overlook. It takes about 30 minutes, but it creates real protection. Your checklist is simple. Put your bank phone numbers on paper. Write down account nicknames, not full numbers if you worry about privacy. Keep copies of your ID, benefit letters, and recent statements in one safe folder. Now you're protected. I'm going to show you exactly what to do with these 5 moves in real life. Do not try to make it perfect. Make it usable. A simple plan used today beats a perfect plan delayed for 6 months. This next part is what I tell my closest family members. It is that important. Use a 2-bank system. Keep your monthly spending money in one account and your backup reserve in another institution. Not another account at the same bank. Another institution. Here is why it works so well. If one bank has a fraud hold, tech outage, debit card issue, or review delay, your whole life does not stop. You still have another path to your money. Professionals call this reducing concentration risk. I call it sleeping better at night. Here is exactly how to apply it right now. Pick the bank or credit union you trust most for daily bills. Then pick a second insured institution for backup cash and automatic transfers only if needed. Keep enough there to cover at least 1 month of basics. Rent or mortgage, food, medicine, utilities, gas. That is your calm account. Do the simple thing now and subscribe, because the people who stay protected are not the smartest people in the room. They are the people who set up one good system and actually use it. Remember when I told you about that fear of waking up and not being able to reach your money? Here is what happened next for one viewer just like you. Her name was Carol. She was 69, living in Arizona, and she was worried after hearing rumors that the government was getting ready to lock down bank accounts. After watching a video like this, she decided to take action. Here is exactly what she did. She moved part of her savings to a second insured bank. She switched every benefit payment to direct deposit. She turned on text alerts. She made a written list of who to call if one account got frozen. She also kept a small cash cushion for 72 hours. Here is the result. 2 months later, her main debit card was shut off after a fraud alert on an online charge she did not make. Instead of panic, she used her backup account, paid her bills on time, and fixed the problem in one afternoon. Her exact words were, "For the first time, I felt like the bank had a problem, not me." If she can do it, you can do it too. One thing I want you to remember is this. The Federal Reserve is not about to freeze your everyday bank account with one magic button, but poor preparation can make a normal banking problem feel exactly like that. Now, here is what I need you to do next. Today, not someday, check your insurance limits, confirm your direct deposit, open or fund a backup account, turn on alerts, and build your 72-hour plan. I'm going to show you exactly what to do again in future videos, but this first step has to happen now. If this video helped you, subscribe so I can keep helping you every week. If it did not help you yet, subscribe anyway because the next one may be the one that protects your savings when you need it most. If you know someone who needs to hear this, send them this video right now. I'll see you in the next one.